Welcome to Stock Therapy with Penny Queen. Today I'm going to be interviewing the CEO of Comstock Inc. But before I get started, I wanted to give everybody an idea of why I'm an investor here. And as far as disclaimers go, I've got over 1 million shares. The company does not pay me. I just bought this as a trade initially. It was under 15 cents. I looked at the chart and saw that it was ready to go. But as the price was climbing, I was doing my due diligence. And as a disruptive and clean tech investor, this company checks so many boxes. And commercialization is the name of the game. They have a proven technology. So I dug deeper and thought that it would be really prudent to have an interview with the CEO so that other investors could see exactly what they're investing in and get a feel for the company and the leadership. So firstly, I saw $325 million non-binding term sheet. Now, the company's market cap right now is just north of 100 million. At the time, it was a lot lower. This is obviously really big news. They've also announced an international license deal, and this is for the fuel side. And the scope and scale of this license is massive, and there's a lot of really good items built into it that are going to be good for the company moving forward. They've also announced some revenue deals for their metals business. And we're going to cover that in a completely separate interview. This is going to be focused basically on the company and the fuel side. But some highlights of the company, it's traded on the New York Stock Exchange, which isn't something that you find a lot at this kind of price point. Average daily volume is over 7 million shares. So this isn't an issue of liquidity. There is a lot of movement here, and there's a lot of people that are just in trading the stock. So again, patented technology, extremely high yield on their fuel products. I mean, this is more than double industry standards. So this is major. They have huge markets, multiple verticals. So again, I invest in clean tech. This company is worth your time in digging into. So I'm going to switch over to the interview, and I'm going to put some bookmarks in here so you don't have to listen to the whole thing because it's going to be long. There's a lot of questions, and it's really interesting material. So thank you for watching. Welcome to Stock Therapy with Penny Queen. Today I have CEO of Comstock Inc., Corrado De Gasperis. Welcome to the show.
Thanks for having me. It's a pleasure to be here.
All right. Well, I'm very excited. I know we've been planning this for a couple of weeks, and there is a lot to talk about, but the purpose of this interview is to be talking about your low carbon cellulosic fuels. So before we dig into that, can you give us a brief overview of all of your verticals?
Absolutely. So Comstock Inc. really has 3 wholly owned subsidiaries. We have Comstock Mining, Comstock Fuels, Comstock Metals. And Comstock Mining is really our legacy business. Our namesake and our ticker symbol, LODE, derives from the fact that we consolidated the entire mining and mineral district called the Comstock LODE in northern Nevada. It was one of the richest silver discoveries in the country, for sure, one of the richest places on earth, with almost 200 million ounces of silver and over 8 million ounces of gold. We have 2 incredible deposits there. We have a fully permitted and built out infrastructure, and we're looking forward to ultimately mining with much higher precious metal prices today. Frankly, the proudest achievement of the Comstock Mining District has been environmental excellence and restoration awards that we received when we were mining, which gave us a tremendous social license and frankly a tremendous platform to then expand our businesses into these other 2 major renewable activities. The second one I'll say first is Comstock Metals, where we're taking photovoltaic materials, literally end-of-life solar panels that are coming out way in advance, much faster than anyone thought. 25-year lives turned into 12, 15, 16-year lives. And so we're capturing those materials and remarkably, cleanly reproducing 100% of the aluminum, 100% of the glass, and then these rich tailings, which have grades of silver that almost challenge the grades that the Comstock miners used to see in silver in the old days. In fact, our first 3 facilities are expected to potentially bring us into the top 5, if not into the top 3 silver producers in the state of Nevada within the next 4 to 5 years. That's really exciting. But Comstock Fuels is the 800-pound gorilla. Comstock Fuels is a breakthrough in technology that's unprecedented, where we see companies taking waste materials, in our case, wood or woody-like biomass, and converting it into extremely high yields with extremely low carbon, almost net zero. We're in single digits with the carbon impact, which is just extraordinary. Now, the one last thing I'd like to say in the overview is the way we structured the platform is that those verticals, those lines of businesses, if you will, are fully dedicated. The mining team, the metals team, the fuels team, they get up in the morning and they only dedicate themselves to the commercialization of fuels, the commercialization of metal recycling. We try to prevent them, protect them, support them, if you will, from having to worry about some of the more mundane things like filing SEC reports and, auditing financial accounting records and those very, very important things that corporations must do, communications, et cetera, so that they can focus on the business. We find that does give us a remarkable a competitive advantage, frankly, in the speed at which they can move forward without distraction, without disruption. And so that's Comstock Inc., I guess, in a nutshell.
All right. So, so safe to say, under the umbrella of Comstock, you have basically separate corporations running all on their own missions.
Absolutely. In fact, standalone legal subsidiaries. We have one vision, net zero carbon. We have one mission, enable systemic decarbonization. But each business's goal would be different, obviously. But it would, in and itself, be focused on how their technology is accelerating the decarbonization. So in every case, we have a proprietary, unique thing that we are accelerating to the market to decarbonize. So we in itself, I didn't say it earlier, but if you think about Comstock Inc., there is one function that we have that isn't the routine, boring, stuff that all corporations would do. It's our innovation engine, right? So we have additional IP in the pipeline. It's not TRL 6 and 7, which is, going to market like fuels and metals. It's TRL 2 and 3. But maybe in 2 years from now, we'll be doing an interview on one of those businesses.
All right. I'm a clean tech investor and disruptive technology. That's the
Get into that.
majority of where I focus my time. And I like, I really like looking at a company that has more than one shot. And especially when you look at verticals that are all on their own path to success. It's not, there's no magic tricks. We're not hoping to just get lucky. There's actual technology that's progressing through the pipeline. And it can be a little overwhelming for an investor to try and understand all of the verticals, but I'll just make you come back. I'm sorry.
Yeah.
We'll go ahead and
It's funny
do
you
a
say that.
segment.
Yeah, we're gonna have a lot more conversation because I want to say we're very systemic in the way we work, okay? And it's funny when you say you don't want to bet on luck, but it's not luck, and it's not luck because of how we systematized the movement of technology from TRL 1 to TRL 6 and ultimately 9. So we are extremely pedantic about getting to the nose, if you will. Like a lot of people get married to an idea. A lot of people think of the technology as their baby. We're relentless on disproving things because philosophically, our view is the faster we get to the no, the faster we get to yes. That's number one. Number two, we address huge markets. We address problems that are fundamentally system-wide, industry-wide, global, if you want to think of it that way. So in renewable fuels, like what's the bottleneck of the system? What is the one major thing that not only is preventing success, but if it can't be done, there's you're wasting your time on everything else, right? So it's a focusing and it's a disciplined methodology. It's very profound. Investors would tend to roll their eyes when we start talking about like notions of systems or systemic management, but it's foundational for us. It's foundational.
Well, I appreciate you taking the correct path, because I've followed quite a few clean tech innovations from, almost just concept to full commercialization. So I have a lot of respect for the process, and it seems like you're traveling at a nice clip. So
Yeah,
I'm
we got
I'm
some
happy to
traction.
see it.
Yeah, we have some great traction now, and three businesses on the brink of commercialization. Metals actually is we've got revenue, it's up and running, right? And fuels is right there, which is what we're about to talk about. So it's very exciting.
Before we go any further, can you give me a little bit of background on you and your professional experience?
Absolutely. So I really, I have a financial degree and sort of a financial background. It wasn't so much Wall Street as much as, going in and auditing and advising like large industrial companies. But I really cut my teeth on my first job with my first real job, as I joke about it, was a global international carbon graphite company. So we were the world leaders in carbon material science and carbon technology, but we were also the largest renewable supply chain in the world. To be able to take petroleum coke from oil and gas, convert that carbon into synthetic graphite, make graphite electrodes and graphite cathodes for metal making, and then use those electrodes to recycle steel fully in an electric arc furnace, where 100% of that, we took 1 ton of petroleum coke, made 1 ton of graphite, and 1 ton of graphite got consumed into the steel making process, into the carbon content of the steel, like closed loop. People talk about closed loop all the time. We lived it, right, for almost a decade. I restructured that company. It was very, very difficult because it was distressed and insolvent when we came in. We restructured it, we recapitalized it, we turned it around so that it was working systemically, networking, synchronizing all of the plants and all of the production. It was a huge turnaround. But what's most exciting was the last 5 years, we filed 700 new patents. We launched three new businesses. And then 5 years in a row, we received the R&D 100 award for commercializing a new product into the market. And it was a 120-year-old company. So we took a old school industrial company and made it a tech company. So the name of the company was UCAR Carbon Company Inc. And we changed the name to GrafTech. So that's my background. So what we're doing right now, just it's exactly the same in terms of magnitude of impact, different materials, but carbon is the center of the wheel.
All right. So I have to, and I just asked a question that I really already knew the answer to, which I don't do
Mhm.
very often, but that when I was first introduced to the company, a friend of mine told me about it, and I had very little information, but it was right around 14 cents. And I was looking at that chart, and I said, I don't care what they do. This chart is ready to go.
Right.
So I did what I never do, and I bought first and thought I would play the chart. But then I started digging, and it was your history that made me go, hey,
Mhm.
there's some experience here going from, you know, I mean, an insolvent company that I don't even want to think about what it takes to do that. But you have a background in accounting,
Yeah.
right? I
Yeah.
mean,
Accounting,
that's
finance, right. Capital markets, et cetera. So, yeah. So a solvent company that was global with 5,000 employees, that was a feat. It wasn't myself alone, right? We had like a SEAL team, of five incredible people but I was leading the transformation. I really, really, really was passionate about saving this company because it was iconic. It was an historical American, legacy. It was just they had done amazing things in innovation and amazing things in industry, so it was worth doing.
all right. Well, let's really get into it. I want to talk about what makes your process different with the fuels.
Absolutely. So, you know, would you mind if I just say one more thing to that last
No, no,
point?
not a bit.
I would like to say that give appreciating what you just said about my background, I'd also like to acknowledge that, the leadership of the metal recycling team, especially Dr. Fortunato Villamagna, spent 35 years in hazardous material handling, waste material recycling, and built plants all over the world. David Winsness and Kevin Chrysler and Raul Babili in the fuels business have spent 2 decades not only commercializing innovative extraction technologies, they invented the process to take corn oil out of waste biomass from the corn ethanol industry. And the entire industry, like 95+% of the industry, adopted that technology. And those byproduct revenues, with hindsight, saved that industry's butt a couple of down cycles, you know. And so then Raul, as our chief engineer, has built over 22 biofuel refineries in just the last 17, 18 years. So I appreciate what you're saying about my background. It's relevant, but like the team has depth. All the team, it's competent and experience.
Yeah, when I started looking and seeing that the business units were running like fully functional businesses on their own,
Oh,
and it
yeah,
looks like Comstock Inc. is handling, all of those G&A services.
yeah,
That gave me a lot more comfort, because it's one thing to look at a chart and say this is hot. It's
yeah.
another to,
See the subs.
re-examine a business and
Yeah.
say, is this worth investing in? And as I went through, I think I looked on the metal side and thought, this is a very viable business. Like
Mm.
this is clearly a, this is a company all on its own.
Yeah.
I looked at the fuels, and I have a lot of experience on in the hydrocarbon world, and I looked at the fuels and went, holy crap, this is a massive step up. I mean, when you start talking about, gallon gas equivalents or gas gallon equivalents, whichever way they want to say it, it
Yeah.
is a massive leap forward. So
Yeah. Orders of magnitude. It's
yeah,
it's
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 it's a
yeah.
it's a big deal. So well, let's get into that and start talking about the fuels and how the process is different, because I think for anybody who is science minded at all, that this is really sexy stuff.
Yeah.
So
So basically, what attracted to us first, it's a waste to fuel process, right? So it's an extraordinary way to take carbon, and an abundance of carbon, which is a key, into drop-in fuels. And when we acquired the company, when we were attracted to the company, they had a very mature process of taking cellulose from the waste wood, which tends to be about 40 to 50% of the wood's content, and converting it into cellulosic ethanol. Now, what was really unique about that was that they were getting yields pushing 50 gasoline gallon equivalents. We'll use that GGE just because it can be compared across the spectrum, but 50 up to 50, which was high, right? If you looked at what the DOE was soliciting, they were saying, is there anybody out there that can do 50 to 60 gallons, from a ton of wood? And that was the benchmark. They were trying to offer money for folks that could do that or do slightly better than that. But what David and Kevin and the team were working on were cracking the code on the other portions of the wood. And it comes right back to David's original invention with corn oil, right? Like, how do we take this other part that no one's doing anything with and extract more carbon? Now, it wasn't overlooked. The lignin is the toughest nut to crack. The lignin is in one analogy would be to say, if you look at a tree, lignin is the Kevlar, that protects the tree. If there was no lignin, bugs and enzymes would eat up there would be no woods, right? They'd be all eaten up, right? So it was designed naturally to protect the wood. It was designed not to crack. And not, the one part of that analogy that's not really appropriate is it makes you think of a vest when you think of Kevlar. It's not a vest. It's fully integrated and entwined into the DNA, right? The cellulose doesn't make up the left side with the lignin on the right side. That's how we can show it, but that's not how it is. It's really integrated.
it's a
So the process,
scaffold, right?
yeah, it's I almost think of it as like, more spaghetti-like in its integration, right? Like,
Okay.
when you rip it apart, like the lignin's not happy, right? The lignin is it's unstable. When 3 or 4 years ago, all Kevin ever talked about is stabilizing the lignin, so we fractionalize it, right? We're able to pull it apart. And that was that was one of the most remarkable epiphanies for me is like everyone in the industry was trying to figure out how to treat a ton of wood differently. And David explained to me like, Corrado, cellulose is hydrophilic. It loves water. Think of your Scott paper towel. Like it absorbs it, it sucks it in. Lignin's hydrophobic. It's literally like oil and water. It hates water. He says, so rather than trying to come up with some new chemistry to deal with two things that couldn't be more different, why don't we separate them and treat them differently? He's like, it's hiding in plain sight, right? The solution is hiding in plain sight. And the technology to do that, to digest and fractionalize the wood is mature. It's not that hard. What's hard though is what Kevin was talking about. You've got this unstable thing, right? And so they cranked the code on asterifying it. I'm sorry, stabilizing it, and then with another technology that we acquired exclusive rights to, esterifying it so that it could then be an oil that can be used just the same as vegetable oil. And so fractionalize it. You can then take the cellulose, make, cellulose ethanol till, your face turns blue. And then you can start making what we call HBO, hydrodeoxygenated bioleum oils. So hydrodeoxygenated oil, we call it bioleum because it's from a natural source. And then those oils can be blended with vegetable oils and sold right into the industry. Now, this is simple. By doubling the utilization of the wood, right? In other words, instead of using half of the wood, we're using 100% of the wood. Our yields went from 50 to 100. Okay. And my reaction was, oh my gosh, we got it. We got it. And we did get it. And we started getting a lot of attention from a lot of people. And that was about a year ago. And then we started refining, working with our partners, right? From stabilizing to enhance it. Because one of my first questions, hey, what's the theoretical maximum yield of the carbon? And our team's like, oh yeah, it depends. I'm like, well, what depends on what? Well, the type of feedstock and the type of this and the type. Okay, on average, what's the range? And I think I was getting poo-pooed a little bit, right? Like, oh, like 145, like 150. And I was like, wow, I mean, that's a big difference. Like that's
Yeah.
50% more improvement. Kevin, get the innovation team on. How do we get the rest of that? And when you think systemically, you always think, what's the theoretical maximum that the system can produce? Or what's the theoretical shortest cycle time that we can do something? We're always going for fastest or most, right? So we started a couple projects on that, and just about 2 months ago, we validated that our yields are now up to 125 gasoline gallon equivalents, 125 GGs. So at 100, you're literally sitting at double the next competitor, and now you've extended that lead by another 25. And the hydro treating laboratory that we were doing all this testing because we wanted to do it with a third party. We wanted to have the documentation. We knew we could do it. We had proven it in our facility in Wausau, Wisconsin. But we needed third party validation, and then we needed customer validation from that third party. So we were in Tulsa. We were working with our partner, Emerging Fuels Technology, phenomenal lab, like 18 hydrocrackers, working it. And we were all sitting there talking about the results, and we were beside ourselves happy. 125 GGEs, right? And then we were talking to Ken, and we were like, Ken, what are you working on right now? And he goes, oh, I've finally perfected my, carbon capture to SAF tech, and I've scaled it to the point where, we can go small, we can go big, we can go medium. And Kevin's like, well, what's your biggest challenge? And he said, yeah, concentrated CO2 emissions. We can't atmospherically harvest, so we're finding like these wells that are capped, and we're boutiquing it all over the place. And Kev's like, hey, excuse me, we have a massive CO2 like from our ethanol side of our
Yeah.
equation. And so, I said, what is that going to mean in terms of GGEs? And the rough numbers are suggesting like, anywhere from like 15 to 25 more. So now you're like 140 to 150, GGEs. And I said, I thought the theoretical max was like 140 or 150. It's like, and they're like, well, no, it's not. Theoretical max is not 145, 150. We kind of didn't want you to get your expectations up too high. This happens all the time in business, by the way. You ask any of your teams what the theoretical max is, they don't want to tell you. Like they know what it is, right? They're physicists, they're engineers, they know. And so we believe now the theoretical max is, and it does depend on the feedstock. I mean, the richer the lignin, the higher the number is going to be. So we look at the entire world of wood and grass. David says we can turn any grass into fuel, but if there's no lignin content, you're going to get 40 or 50 gallons, right? It's not what we want to prioritize. But your numbers are going to be somewhere between 175 and 200 GGEs. So we still have 3 development projects that are going underway. You'll never hit the theoretical max, but you have to be obsessed with chasing it because that's continuous improvement. That's what makes the system sustainable, frankly.
The I mean, it makes sense why there is so much new attention on the business side. Definitely from investors. I mean, that one's a no brainer. But having other businesses, seeing your news releases lately, like the Department of Energy, the
National
NREL
Renewable Energy
and
Lab.
MIT,
Well, yeah,
huge. I saw that. I was absolutely thrilled. I was on vacation and had to like stop and like
yeah.
go through that. So
Like, what
um,
does this all mean? But let me say so NREL saw our process, right? They saw our technology. They were working on they've been working on advancing biofuels a heck of a lot longer than we have, and they've got the leading scientists in the world, like in the world. And when our first meeting, you would laugh if you were sitting in the room listening to it because both sides were anxious, right? We were like, "What are you doing? Like, what are you doing? Like, what are you doing?" And their first comment to us was, "We think you're leading with what you're doing, and we would like to partner with you, and we have some grants that we would like to talk to you about." And we said, "Put the grants aside right now. Show us what you're doing." We got aligned on 3 development projects and we said we'll fund them. We will fund them. Now we're not averse to grants or anything like that. Don't get me wrong, but we were like, what's the theoretical minimum time
yeah.
to prove this out? Because these breakthroughs will take us to multiple higher levels that were previously not contemplated. Like what we were doing, we didn't contemplate the advances, and what they were doing, they didn't contemplate the advances, but together we saw much, much further than we did individually. And that's a network effect, right? That's a systems effect. What was remarkable was that Joe Stanek, who is the leading chemist and the leading inventor on the RenFuel side, which is the esterification technology that we've partnered with in Sweden, and the leading scientists at NREL and MIT, they're on first name basis.
Okay.
They're the leading lignocellulosic scientists in the world, and now they're part of Comstock's innovation network. It's remarkable.
Yeah, I'm really excited to see where that goes. Probably not as much as you are,
Yeah, well,
but
from an investor perspective, exclusive rights,
yes.
all of the RenFuel technology, exclusive rights for almost every type of woody biomass on the planet with the NREL technology, Comstock technology, all one.
Yeah, I have to say I couldn't be more excited. Like I said, my first buys were like 14.7. Very grateful to find it right where it was. I think I went out with like 500,000 shares right away just off the chart. And then, I was adding all the way through 40. I think I've got some buys that have been at like 58, and in the beginning
That
I was jiggling things around, and now I'm like, I want to watch this process develop. So
the impact that we're going to make and the financial impact on top of that we're at the tip of the iceberg. Yet people are going to be in a year from now, and 2 years from now, they're going to be, oh my God, I had no idea it was this.
Yeah, and this is the reason I love these smaller price points when it comes to innovation is the amount of opportunity there is when something is undiscovered as it makes that breakthrough. You cannot find that otherwhere or I mean, anywhere else.
Yeah. Yeah.
You can look back and say, hey, this, oh, NVIDIA, that really worked out well for people. Sure, it did. And that took how long to happen? You give
30
me
years.
2 or 3 years with a real innovator,
Yeah.
and you have this opportunity for returns.
I feel joy talking to you because we've had to overcome our legacy just because my third turnaround project was a mining company, right? We've always been material science based. We've always been innovation based. We applied that innovation to some remarkable restorations and reclamations on the Comstock, but we somehow got tabbed as junior miners. That's not who we are in our DNA, right? We're good, we're great miners. We're proud of what we did. But my point is now people are starting to recognize that this is an innovation system, and the breakthroughs that you'll see just in fuels will be stunning. They'll be global. The breakthroughs that are in the pipeline, like we're not even talking about. We're not even talking about them. And some of them are direct, some of them are derivative. You're working on these molecules, right? You're trying to treat wastewater. You're working on these molecules. You're trying to accelerate the viscosity of the fuel through the system. All of a sudden, you're stripping clean hydrogen out. What? It's like that kind of thing. So they're derivative. Like they weren't the original intent of the experiment, but you're right in the middle of that molecular development. Some of them are designed purposely. So, it's the best of both worlds, we feel like.
Yeah, it's definitely an exciting space. I mean, it always makes me wanna go back and get a nice, master's in material science to understand things at a higher level. But I think I'm just gonna stay on this side and
Yeah.
enjoy it as an investor and sometimes have to have things explained to me a little slower. So
You will we should make a note to have a follow-up conversation on what material science-based AI is going to do to the world in a few years. You've got all the large language models and you've got all the, ChatGPT and open AI stuff going on, and it's revolutionary and it's going to disrupt a lot of business things for sure. But when you start talking physics-based and when you start talking chemistry-based and you're looking at these you're simulating at the quantum level. You're literally simulating atomistic, activities like how the electrons act, the band gap, right? Heat densities, thermodynamics. It's going to shorten cycle times in a way that's almost terrifying in speed. You know,
yeah, I'm excited for all the innovation that's definitely going to be happening. But being on the ground floor right now during that acceleration, I think is a
the
lot more valuable than
best. Yes.
hopping in
It's best.
midstream. So
It's
yeah,
best.
it's definitely an exciting time to be alive, and it's a
Both,
really
both,
exciting
both
time.
being there as it's happening, commercializing as it's happening, that's the key. When we talk to pure material sciences, pure condensed matter physicists, right? Pure quantum chemists, pure machine learning engineers, whoever they are, that's the people you're dealing with, right? Commercialization isn't even a word in their vocabulary. I mean, their vocabulary is bigger than yours and ours, but commercialization is not in it, right? That they don't think about going to market.
Yeah.
That's where we feel this, the system being holistic. What does it take from beginning to end? You use the term vertical, I use the term horizontal because I'm always thinking from left to right, right? How does the system flow? So but it's the same concept, right?
All right. So let let's switch topics here. Now with funding on the table.
Yeah.
How long do you expect the 50,000 gallon plant to take to build?
Yep. So the funding was perfectly synchronized for the startup. So for the $325 million commitment, that we got from SBC, 200 million is dedicated to fuels. The 200 million was precisely for two things. One, 150-ish million of that number. Obviously, we hope that we'll always do lower, but we wanted to make sure we have sufficiency. 150 million, and it's 50,000 ton. It's
Sorry.
50,000 of wood in. No, it's okay. 50,000 ton of wood in, right? Which then would produce at 125 million, 125 gallons per would be like a 6, 7, 8 million gallon, demonstration facility. We like that because it's really profitable. We like to prove both high ability to scale and money making at the same time. We already have a 2,000-gallon reactor in Wausau. We've already proven it at certain scales. We've already produced the materials out the other side. So we're happy with all that level. We have some customers like the Australian contract that wanted to, hey, let us start at 250. Let us start at a million. No, you're starting at 50,000 tons. Okay. Start at 50,000 tons, prove it. You're making money. Then scaling up from that, trust us, will be faster. Trust us that you'll get to the end that you want to get to faster by taking two steps instead of one step. And they agreed. So it would take about 24 months, and I'm going to give you a plus or minus, right? 6 months on that, because there's some incredible dialogues going on right now with existing facilities. In one case, like a hydro treating facility on the downstream. In other cases, like pulp and paper mills on the upstream. Some people call it the opposite, right? So, front end of the supply chain, back end of the supply chain. And if we co-located with an existing operation where there's a woody biomass supply chain already in place, where there's forestry wood coming in and already doing something, it could be much faster,
Okay.
right? And both of those types of conversations are also in that 50,000 ton a year to start, and that's coincidental. Like, let's say you have
Okay.
a paper mill who's throwing off, 50,000 or 100,000 tons of waste wood. Well, okay, let's come and run alongside that. Or greenfield, which we have even more conversations going on. So, but if you're greenfielding it, then, typically permitting is the longest lead time. But when you have some infrastructural things to do, like setting up logistics and setting up the material flow and storage, some of the things that would already be taken care of at an existing location, then it could take a little longer, but not a lot longer, because a lot of those things also can be done in parallel with the permitting process, right? It just adds some variation and complexity that extends it. But 2 years is decent, right?
Okay.
Now, remember, in our first agreements, because of our competency, like our engineering competency, we have it in-house. People may not have appreciated that. We acquired a firm called Renewable Process Solutions. Raul was running his own engineering firm. He built 22 biorefineries in 17 years. David and Raul were like glued at the hip every time I was in a meeting. So we acquired the cellulosic fuel business from David and Kevin, and we acquired Raul's engineering firm, and we combined the two, right, into our fuels business. So we have competency. We will be paid engineering service fees from the beginning of signing the agreement, right, to the actual commissioning of the facility, in which case it'll become revenues instead of engineering service fees. So we will have revenues even before production is up and running.
That's
So that,
important.
yeah,
I
it's
mean
very,
that it it'll change the look of the company from the outside,
right,
right?
because
And
because
probably give
we
you a
won't
lot
be
more
pre-revenue anymore. We'll be pre-production, but we won't be pre-revenue.
pre-revenue. That's
It's a very meaningful thing.
yeah. When I read over that news release, that made me very happy to see have that built in there, and then of course the equity in the plants,
Yeah,
right?
that was not greed based, right? That was showing that we have to be integral into this buildup. We have to be integral into the startup. And so we're going to have their engineers on site in the United States. We'll have our engineers on site in Australia, for example. And we're really collaborating much tighter than a normal licensee licensor relationship. It's much more strategic to us. Not to mention, we don't want them, we want them to be successful. We want to ensure their success. We're willing to put capacity and calories and to ensure they're being successful. But we can't do it for free, even if we wanted to, which we don't. We can't do it for free, right? We have to get some consideration for it. So that equity really, we felt, aligned both of us very strongly.
Perfect. Yeah, as a shareholder, I don't I want you to not do it for free. So
Yeah, no, yeah. It's really, really well designed for success. We're excited about it. And now there's multiple conversations going on trying to replicate, that, around the world.
perfect. All right. So how many facilities do you believe the market can bear?
Let me start with the United States first with that question. The United States burns 240 billion gallons of fuel for transportation alone every year. The US government has incented to 16 billion gallons for advanced biofuels, which is barely being tapped. And it's barely being tapped because of what I said earlier. Feedstock is the constraint of the system. Our technology unblocks that feedstock. So if you just assumed 100, let's go to 125 gasoline gallon equivalents per ton of wood, we would be able, and we did, a million gallon facility would be 125 million gallons of fuel. So a million ton facility would be 125 million gallons of fuel. You could do 100 to 130 facilities in the United States alone, and you would be tapping that 16 billion market out of 240 billion. If we have success in our intentions to lower our costs, ultimately to become closer or in cost parity with petroleum, the market wouldn't be 16 billion, it'd be 240 billion to us. Okay. So right now it's 16 billion. Right now you're talking 100 to 130 facilities, 120, 130 facilities in the United States alone. It's a global market. Every single country is demanding now sustainable aviation fuel, is demanding now decarbonization, renewable diesel. So the numbers are staggering.
Yeah, these financial models are like that's when you start to do the modeling, and I'm sure your modeling is much more extensive than mine. But I got to a point where I just said the math is all on your side. And it's not just you're not just creating fuels too. That's the other thing that it is that carbon intensity that really makes it I mean, it's not just a good business model, it actually matters.
It matters to the point where it's the only solution that we can actually see materially decarbonizing, materially, meaning affecting humans, making a difference. And we've got designs to invert the curve. So what happens is if you're taking waste wood, and the government in the United States is the other question. You say, well, how much wood is there, Corrado? Like, how much wood is there? Okay. Well, the government puts out what they call the billion ton report. The billion ton report identifies a billion tons of waste woody biomass and agricultural biomass that most substantially all can be used in this process. So there's enough waste wood to solve the problem. But now, what if you're starting to incent farmers like exactly what happened in the corn industry? When corn ethanol, which is it's a different 16 billion that the government incented. The government said, hey, can you do 16 billion of corn ethanol? And can you do 16 billion of other advanced biofuels? The corn ethanol built 200 facilities in 7 years. So the numbers we're talking about already done, already happened. Guess who one of our top, engineering, construction, procurement firms is? Same exact guy who built like 70 ethanol facilities. It's already been done. But then you start saying, well, wait a minute. Didn't people start growing more corn? Didn't it actually create a farming or agricultural based business that didn't exist before? It surely did. We're talking about on an exponentially greater scale. If people start growing woody biomass, be it, sugarcane, be it willow, be it bamboo, be it hybrid poplar, if they start growing wood, think about while it's growing, it's sucking CO2 out of the air. While you're waiting for it, it's sucking CO2 out of the air. You have inverted the curve. So you're going to create an oil and gas industry that's not of a magnitude that's incredible. You're going to create an agricultural industry that complements, and you're going to create true circularity. You're going to create true circularity. And it's been done before. Like it's been done with corn. I look at corn as the pilot test. Corn was a small pilot test.
So, and there is a big difference though. And the big difference also plays in your favor. Humans do not compete for wood.
Correct.
We do not eat wood. We can't process those
I love it.
sugars.
Absolutely.
So
Absolutely.
that I've watched other companies. I definitely made a lot of money off GEVo as they were really getting into commercialization and seeing, okay, this is more than an idea. It has feet. But I never really loved the idea because it was food. It's
Yeah.
important. It's a
It's
good
critical.
source.
There's two major negatives. There's two major negatives. One is you're fighting with the food chain. You said it perfectly. The second one is it takes a lot of carbon, right, to do what they're doing, and so, you're burning carbon to do all that, and then only 10% of it gets blended into the petroleum feedstock. So how big is the impact really? Their CI score is 70, but you get 10% of that real time. So what does that mean? Our CI score, and then so then you move to soybeans. Oh, like even worse, like you're growing soybeans for vegetable oil for food, okay? For fuel, I'm sorry, instead of food. So their CI score is 55. RCI score with conservative, offsets, using just certain conventional offsets for certain things, which we would do better on, is 15. It's 15. So if we do better than conventional
Which,
offsets, we're up
for
10.
anyone who doesn't know, lower is better.
Lower is better in terms of environmental impact. Lower is better in terms we get way more revenue per gallon.
Yeah.
Like, let me use exact numbers. Our cellulosic ethanol is molecularly identical to corn ethanol. The government might pay the corn guys up to $1 extra a gallon. We get up to $3 extra a gallon. How much does corn cost versus waste wood? It's a fraction. Our variable cost is a fraction of their cost. Our revenue is much higher than theirs, right? Same exact molecularly identical product, but that's only the small percentage of our equation. We then bring the lignin to bear, and we're doing it all over again, doubling and tripling those numbers. So the financial model is staggering. I don't think I've seen a model where we've modeled more than 5 facilities yet internally, and there's tens of billions of dollars, right? So you're talking about 130 facilities in the United States alone, right? People haven't gotten their heads around it yet. We understand it's coming.
Yeah, it's just so exciting. I try and, I like to be grounded as an investor and, and I'm looking for a certain amount of check marks along the way. So I get excited. It's very easy to look and see the path. And when you see that you have legislation and government funding all in your favor,
Yeah,
that's a
supporting
lot
it.
more green lights. So
Supporting it. I'll tell you, it's probably relevant to say, in 2016, the government, the EPA came out and said, hey, we need some input. Ethanol, corn ethanol did exactly what we were hoping and what we intended it to do. Advanced biofuels haven't moved as fast. What's wrong? Do we have to improve our guidelines? Do we have to change our support, we want it to happen. We want them to do 16 billion gallons as well. And in 2016, David said that big oil really wasn't present, in the feedback. And if it was, there was still some friction. In 2022, they came out and asked the same exact request. There was over 1,000 submissions, unanimous support for advanced biofuels, unanimous support for advancing the cellulosic fuels. And they approved that they would give RINs not just on the final fuel, the drop-in fuels, right? The sustainable aviation, et cetera, but they would give RINs for biointermediaries. What's a biointermediary? Bioleum is a biointermediary. Cellulosic sugar, which we make both of those, are biointermediaries. So they're saying, let's get this thing moving faster. The government's super supportive. Then, of course, the IRA came out, and what they did for SAF cannot be exaggerated, right? It was the spark that was needed to get everybody motivated. to start moving forward with sustainable aviation fuel, and it's a game changer.
Yeah, the Inflation Reduction Act is a groundbreaking piece of legislation. I was excited to see that passed. I mean, it had so much for critical minerals as well,
Yeah,
but
absolutely.
just a global impact on pushing us forward in decarbonization. I'm very very excited.
Yeah. And energy is the bottom line. We believe we shouldn't compete with the food chain, and we don't. We believe that we need more energy. We don't even feel like we're competing with corn. We don't feel like we're competing with petroleum. We just need more. We need more, and the cleaner, the better.
All right. Let's talk about the term sheet and how the
Yep.
funding would be used. You talked a little bit about it on the
Oh
fuel
yeah.
side, but can you just break down the other pieces?
Absolutely happily. So what happened really, it felt like it was an overnight thing, because it all came in one term sheet. But what really happened is we've been spending the last 2.5, 3 years on validating all of this tech to TRL6 and then commercializing it into seven and forward. And so we were able to build a model that was really, really supported and validated, would sustain the highest level of any Wall Street type of due diligence for Comstock Metals, for Comstock Mining, and for Comstock Fuels. We also have some real estate that we own that has nothing to do with any of those lines of business. So the term sheet breaks out like this. $200 million is the exact number in our model to get that first facility up and running. Plus, I didn't finish my thought earlier, the development that we now need to support, globally. Like we need some engineers, we need some business developers, we need some commercializers, right, to get these other projects supported outside of the ones we're building ourselves first in the United States. So we got to be, so 150 of the 200 would be for building that first one here in the United States. And 50 supports our global activities, right, for commercializing the business and, into um, maybe a same degree, maybe a more important degree, maybe a lesser degree, depending on which piece you're talking about, the innovation projects that are moving forward for fuels, with NREL, with MIT, right, with another two universities that we haven't disclosed yet that are really advancing incredibly exciting things. For mining, it's there's about, it's incredible. We have a model that when when we did our first engineering of the mine, we used an equivalent of $1,800 gold price to cut it off. And
So
we updated
26
that.
now,
Yeah,
2600.
2650 now. We updated that, I think around 2300, and it's really robust. There's hundreds of millions of dollars of cash flow to truly do it the right way, right? Which would also include some drilling that probably is going to grow the resource beyond the numbers I just mentioned, even though we didn't model those. It's about $50 million. So 50 million is we do drilling, we do final engineering, probably going to result in some expansion, right? And then net, including that number, we would be throwing off hundreds and hundreds of millions of dollars from that mine plan, even if we didn't grow the ounces, which we almost certainly will. So that's 50. So you have 200 plus 50. With the metals business, the CapEx, the recycling of solar panels and recycling these metal products is the highest throughput business, meaning not the most magnitude of dollars, but they go fast, right? It's a very fast process. We can do one panel per second. They pay us up front to receive the panels. So so like engineering services and fuels where we get paid up front before we start, they send the panels, we get paid before we even start processing them. So it's like almost a negative working capital concept, positive cash carry. We just think of it as throughput. For us, it's simple. Throughput, throughput, throughput is the speed at which the system generates cash. And that CapEx there is very, very low, right? Because, whereas in fuels it's higher, in metals it's only 10 to 15 million. And the difference, the reason that number is so big, it's literally 10, 11 million of equipment to get one industry scale facility up and running. That facility will throw off 40 to 50 million of cash a year. But we might have to build a building in one case, we might lease a building in another case. So we have a higher range depending on if there's a building built or not. And that's about $25 million that would come in. That would ensure, we're already building the first facility, that would ensure facility number two, facility number three would be up and running. I don't, in all scenarios, the equity capital, 200 plus 50 plus, I'm rounding up 25, right? That 275, that gets you to cash flow with each business. We're in a new state of reality, individually and in the aggregate. Then we have some real estate that has nothing to do with any of our lines of businesses I just mentioned, and we're selling that for $50 million. So that's the 325 million in the simplest summary.
All right. Can we talk a little bit more about timing? And I'm sure you're in the thick of it right now.
Yep, absolutely. We're in the thick of it right now. The term sheet, and I was trying to explain this, like we, it wasn't like one sitting where we came up with one term sheet, right? We were talking first, frankly, ironically, about just selling those real estate assets, right? And we sort of came to terms, but it's hard for me to be in a meeting talking to sophisticated investors who like clean tech, and not talk about what Comstock's doing, So, one thing just led to another, and unfortunately or fortunately, however people want to think about it, and I tried to avoid it. Like I just wanted to sell the real estate. Like I'd have been happy to sell the real estate and move on to something else. So it elongated the process, but to a very good outcome, right? They really ended up liking the businesses. We also had to finish those models. We had to finish the business plans. We had to finish the validations. So frankly, when we were first having conversations, we didn't have all, we wouldn't have been able to finish all the diligence, right? There wasn't any negatives. We just hadn't finished all the validations, and the 100 GGs ended up to become 125 GGEs, so that, then we had to change models, and all that was dynamic, but it all came together. And it was very exciting when it all came together. When it all came together in August, we just felt it's too material. Like we know we're not done yet. We know we don't have definitive final agreements yet, but it it's material. Like we gotta announce it. And we also very confident, like very confident. We've been working now with these folks. We've forged very, very good relationships. SBC is introducing us to like fuel opportunities in Asia, introducing us to fuel opportunities in Europe. I mean, we're working with them on a business development and M&A side of the equation at the same time, that the capital is being finalized sort of to come in. So I think we've always said that once we pin down the finals, I think what you're going to see, and I've mentioned this before, like the real estate and the metals, it's just like, we're substantially done with the work, right? With the mining and the fuels, we've got a little bit more, understanding and approvals to go, but not a decision approvals, but just, the pure diligence, the definitive agreements, there's some entity structuring that we really have to make sure we get right. So if we don't do it right, then we can impair like our net operating losses carry forwards that the corporation has. We could trigger an unexpected negative tax consequence, even different than that. And so we're working vigorously on those things, and it's all going, it's to me, it never goes fast enough, but I don't feel like it's going slow. I just feel like there's a lot to do. We're just getting it all done. And I still think we're looking at a Q4 event because we've always said, between those four closings, we would expect 60 to 90 days, right? Maybe,
Okay.
maybe metals and real estate being on the shorter end of that range, and then the fuels and mining be on the higher end of that range.
Okay.
That's directional. I don't have project schedules that
Yeah.
pin me. We're doing the work as fast as we can.
Okay. All right. So we just had that international licensing agreement come through. Really big news. And we've touched on it a bit already, but could you give us a little more color on it?
Yeah, we were very excited about announcing it because the way it came together was very holistic. So we have a partner, SACL, that has a lot of competency in this biofuel arena. More than that, they have secured sites, they have secured partnerships that bring feedstock, that bring the right type of chemical engineering labor, that that bring offtake. Though we recognize, right, the competency of what they had organized and coordinated because we're doing the exact same thing in the United States, exactly the same thing. And so, and capital is pooling, right? So they have capital interest, they have capital support, they have capital partners, and it's pooling for this application. So once we got into the due diligence and, they started modeling, our variables, obviously, it's very powerful. The financial model is very powerful. And we felt it was almost like a leapfrog, because we have various target markets and we have various target partners that we're engaged in. Australia wasn't even on our radar screen. So the outcome was because of our engineering competency, instead of paying a third party, ECP like 15%, which I think would be normal for any major construction product, we showed them that, we're easily half of that. We're a third to a half of that in what we know. Like, in other words, we'll do a lot of the preliminary engineering. We will order some of the equipment. We will be involved in some of that process. So we get 6% engineering fee. So that'll start as soon as the site license is signed. We'll get $2.5 million up front, and then 6% of the capital that's being deployed. These facilities are over $1 billion. So for 3 facilities, they're looking at $2.5 billion. 6% of $2.5 billion, right, is 150 million. So that'll happen over 2, 3, 4. I don't know when all the sites are going to exactly start. So it could even be 5 years, right? Depending on, they're not going to start all 3 sites at the same time. We know that. Then once the sites are commissioned and up and running, you're getting 6% of revenue as royalty ongoing. Because this was so strategic, because there was such collaboration and working together, we also get 20% of the equity in each project. So we think that's very well aligned. We think it's an extraordinary win-win, right? That what's going to happen in Australia, environmentally, and what's going to happen there financially, they're going to be all ecstatic, and we're going to be ecstatic as well because it's fully aligned with our goals. So that's the project now. Talking to countries in Asia, we're talking to countries in Europe, we're talking to, as I said, a lot of people here in North America. So it's a great model for us to now be pursuing. There'll be differences. In some cases, there's governments involved. In some cases, there's aviation authorities and or, aviation authorities or airports or airlines, involved. So, but we like it because we think holistically, we think systemically, right? We don't want to do anything that isn't sufficient. A lot of the texts that people look at are necessary. A lot of the components, feedstock, necessary, but you have to have sufficiency of the whole system. Otherwise, somebody's deploying capital and then sitting there twiddling their thumbs. That's dead. That's dead money. You can't have that.
Yeah, absolutely. It's really exciting to be playing in an arena where there are so many deep pockets because we're talking about very expensive facilities, but they're expensive to me. They're expensive to, a small company, but they are not expensive to these industries.
No, no. I mean, and it's great that you say that, right? There's major pools of capital. If you worked with infrastructure funds, we're talking about hundreds of billions of dollars of capital, tens of billions of dollars of capital. They understand the implication and the magnitude of what needs to be done, the magnitude and the implication, said the other order, and then governments as well, right? So these are infrastructural things. They're sustainability things. They're climate critical and things that have to be implemented. And then what's amazing though is we leverage existing infrastructure. A gallon of cellulosic ethanol, you don't have to change any infrastructure. A
Yeah.
gallon of, yeah, you don't have to change, we leverage the existing infrastructure, which is not so common when you're talking about clean energy. When you're talking about revolutionizing clean energy, a lot of times you have to change out all the infrastructure, and like electrification. we're a supporter of all clean technologies if they're truly clean, right? But if why would you universalize electrification for automobiles? I mean, you would destroy trillions of dollars of infrastructure and then need to build trillions of dollars of more infrastructure. Well, that you know, you don't have to deal in absolutes here, right?
Yeah.
It's better to leverage what you have and then add to it intelligently.
No, I think so wholeheartedly. As somebody who has gas hybrids, right? The electrification of vehicles is fantastic, but it's limited. But when you
Yeah,
start dropping the carbon intensity of your fuels and you start utilizing waste,
it adds up.
you shift the entire ecosystem cleaner. And
It does.
I think there's room for all of the competing technologies, but the way that we turn over our entire fuel system is by making the fuels themselves clean. So,
Cleaner, absolutely clean. In our case, clean, but certainly hopefully cleaner. Yeah.
well, much cleaner. Yeah,
Much
that's
cleaner. Yeah.
okay.
Much.
What kind of changes or milestones should investors be expecting?
So with fuels, you're going to hear commercial agreement, commercial agreement, commercial agreement, commercial agreement. So that's number one. And then, of course, those agreements will be tied to production milestones. Those are, the first production, as I said, 24 months plus, with that announcement. Australia's, leading right now with their project announced. But when we announce our US projects, they're not going to be behind, right? Because we're putting all those pieces together. But just the agreements, you'll see offtake agreements with blue chip companies. So they could be refiners, like the largest renewable refiners. They could be airlines. They could be governments. You'll see agreements with critical players like RenFuel, like Emerging Fuels Technologies out of Tulsa, the bolt-on tech that I was talking about earlier that increases our GGEs. You will see feedstock arrangements, right? And those are the ones we haven't really been talking about, right? But feedstocks are going to be, the people are going to be like, oh my gosh, how did they do that? Oh my gosh, that's amazing. Because we're trying to be innovative in a climate friendly way. So we're afforesters, right? We dream of, like, when Columbus discovered America, there was 1 billion acres of forest. 330 million of those have been deforested, we would think generally unproductively. Put 120 million of those back, the game is over. We're back, right? We've inverted the curve. The game is over. Obviously, we don't need to do that ourselves, right? But we want to incent that kind of behavior. But feedstock agreements, you're going to see very innovative things, using waste, which people will be like, yeah, that's what we were hoping they were doing. But then B, some things that will innovate even beyond that. So with fuels, it's going to be very exciting for the next 6 months. That you're going to hear a lot of that all over the next 6 months. Not to jump forward, but with metals, you're going to be hearing similar large offtake agreements with major utilities, and you'll be hearing about, filing our permits for industry scale facility one, industry scale facility two, industry scale facility three, and then more offtake agreements. So we're really into the commercialization mode. So it's going to be commercialization, 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 and it's going to be up and down the supply chain. The other thing, which we don't have time frames with. So 6 months is probably aggressive, but not out of the realm, is some of the new innovations that we'll be hitting milestones with, right? So that could translate into more GGEs for fuels. That could translate into reductions of capital and reductions of operating expenses for fuels, or it could result in something like very new.
Okay.
Holy crap. I don't know they're working on that.
Okay. So the innovation side is one that we're definitely going to need to come back to.
Yeah,
That's I get really excited about the I don't know, I want to call it like an incubator. You see
yeah,
these technologies coming in, and I do see that there's a lot of horizontal applications
yeah,
for
yeah,
your verticals. So
yeah, yeah.
I definitely want to come back and touch on that. I think the next segment that we should really do is the metals, because having just being where it already is operationally and just the general sexiness of a tipping fee on the way in and those ultra pure materials on the way out,
Yeah.
and even talking about where you are geographically and how
Yeah.
that plays into our current system with California and their rules, and
Yeah.
really excited to hit that.
Love to do that.
And of course mining for anyone. I do cover a lot of mining companies that are in my portfolio, and it's like that sector is really hot right now when you look at the amount of need for the metals, especially
Metal.
silver.
Metals. Yeah.
Silver is so ripe for correction.
It is so ripe for correction. It is the demand for it is just finally the demand has crossed the supply in a strong way over the last 2 years. The demand is growing remarkably fast. Solar deployments are having a lot to do with that. Advanced battery technology. Samsung just came out with an incredible battery. It has a lot to do with that. And all the existing precious metal deposits are being depleted. They're all in a declining mode. You're not hearing any new discoveries. So the notion of more extraction and cleaner extraction and the notion of better and more intelligent discovery is in our pipeline as well. So those will be wonderful to talk about.
and
Yeah,
then
we
and then already having a resource and inferred, it's is it 43101 compliant?
yeah, so we have, yes, we shifted to SK 1300, which is now the new, finally the US caught up to the Canadians, right, on the resource
I
reporting
don't
standard.
believe it.
It's true. They have SK 1300 is there. It mirrors 43-100
Okay.
wonderfully. And we have to do SK 13 because we're an SEC filer. We're listed in New York Stock Exchange under LODE. And we now are allowed to disclose all that information in our 10Ks and our 10Qs, which previously the SEC didn't allow 43-101 disclosures in our filings. They were we could furnish
That's
them, but
rough.
of them, which is really ridiculous. I know, but we're over that hump now. But no, we're measured, indicated, and
Yeah.
inferred. And internally, we've engineered the mine. And we haven't had a third party validate that mine plan. When they do, and the economics associated with it, then it would be proven improbable reserves. But
Okay.
I'm saying we've already done that internally. We have incredibly advanced, chief geologists, chief engineers, but we haven't third party validated it yet. We're still expanding the resource too, so we'll see where it lands. But all that is great. We would love to talk about that more with you. The way that we operate, you can make an analogy to an incubator. You can make an analogy to an engineering and developer. You can make an analogy to a commercializer, right? We have the whole system, right? We want the constraint of our system to be the rate at which we develop new technologies, the way that we innovate new technologies, and we've designed the system for that. That's unusual.
Yeah.
Normally a startup company would just be that inherently because that's all they do. A manufacturing company usually is in conflict with its development activities. Okay. We have said innovating new tech and the speed at which we get it to market, we want to be the warp core of our system. We want it to be what tells us at what light speed this thing can move forward.
All right.
It's unusual. It's very different.
Yeah, I, it's one thing to buy a stock that looks like it's going to move, which I'm prone to do. It's another to find a good innovation within the company and see that it has promise. But it is a whole other thing to see these very well stacked pieces
Yeah.
and to have at your price point right now your market cap's about 107 million, which
Yeah.
is hilarious to me. I'm fully willing to take advantage of it, but it's hilarious to me, and to have a big board, you are not New York Stock Exchange
Yeah.
listed, so everybody can buy it. I am very excited for the next wave of investors that are going to find out. um, they're going to find out about the company, and then there's these other little gems that are hidden in here, and the last one I want to hit is the fact that you have been around since 2008, and in all of this development I know there are tax loss carry forwards.
Yeah, yeah. Well, before I quantify that, I want to say kudos to you. I mean, you did see something in us that was right. You saw it. It was there in plain sight, which was the low share price. But then when you peeled the onion back, you started peeling the onion back, right? So I think most people would stop there, at the chart. You started peeling the onion back, and I think you are seeing it. You are seeing it. It's real. Which I really appreciate because most people don't take the time to. They're more superficial and they just think they know. But when you peel the onion back and you're curious, it's much more exciting. We've been doing this now, yes, it's been 15 years. So we have for a very, very long time been exploration and development. And then we ramped that up a bit too 4 years ago with these new exploration and developments, right? For these new things. Now they're making it to the finish line, super exciting. We have almost $250 million of net operating loss carry forwards. And we are very attuned to ensuring they're preserved and that we're not losing them or they're not being limited or restricted in any way. So we have a long runway of profit making before we're going to pay any cash taxes. So it's a huge hidden asset on our balance sheet. When you think that those net operating losses are not on our balance sheet, the accountants make you put a valuation allowance on them and net them to zero until literally profit starts coming in the door. So they're sitting there as a hidden gem. When you think that our mineral resources, like hundreds, if not almost 1 million ounces of gold and 10 million ounces of silver is not on our balance sheet. And frankly, that $100 million of valuation you talked about, I could quantify just with a couple of pieces of real estate and an investment that we made, which would say that the fuels line of business, the metals line of business, and the mining line of business is sitting at zero valuation right now. So I try not to promote, but if you were saying, yeah, we have to be the most undervalued situation, okay? And the only question is, how good are these guys at getting this thing to the finish line? And that's all we want to do. Like we just want to demonstrate achieving these objectives. Just milestone, 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 milestone. And then we hope that plus some good communication, some clear and effective communication will allow the market to really sink their teeth into it.
Well, in terms of clear communication, I'm going to make sure that your investor deck is linked below my video. I'm going to make sure that my email is available for other shareholders so that I can kind of collect more investor questions. And then, because I'd really like you to dedicate your time to getting all the deals done. So hopefully, we can get some more of these investor questions to you and be able to answer them, but also break down the company by your individual business units, and so people can absolutely understand what it is they're investing in, because I this is a long hold to me. This isn't a flip. And I want to know as much as I can about every company that I care about. I want to know everything about companies that, by nature of profits, are paying for my children's education, right? And
Outstanding.
that's what I want to know. And again, if you didn't catch the disclaimer at the beginning, there is none. I own shares. The company is not paying me. This is not a transaction. I want to make sure everybody knows as much as possible, because I think they're not buying as much as they should be. That's the bottom line.
Yeah,
So
that's wonderful. I enjoyed this. I look, and I do agree. Let's have another conversation on metals. Let's have a conversation on mining. Let's have a conversation on innovations. There's more coming for sure.
perfect. Well, thank you for joining me today, and we'll be back to it soon.
My pleasure. Thank you.
Thank you.